screen is there. I'm there. Sufficient. Yeah. No printout. It's okay. You can take it out later. All right, people. Yeah. Someone reminded that recording was not happening. Okay. Thank you for that. Keep sending reminders like this. Zindabad. Okay. Yes. Yes, people. So we'll be starting with a topic called now introduction, overview, or rather applicability of accounting standards. Sir, introduction of AS is a separate topic in your study material, and applicability of accounting standard is a separate topic. I've merged and made as one because not much content is there. Shuma Institute was with loads and loads of contents, but in reality, there's not much of things over here. So first, let's go one step back. Accounting standards. What are accounting standards? Accounting standards. What do we mean by the term accounting standards? A little bit of it you might have heard about this in CA Foundation or somewhere. Some rules and so accounting standards is rules and regulations regarding accounting. Some rules is saying. Sir, we already have wonderful golden rules. No? Personal account, debit what comes in, debit the receiver. Debit the receiver, credit the giver, debit what comes in, credit what goes out, debit expense loss, credit income gain. Like that wonderful rules we already have. Those three golden rules are not sufficient. Those golden rules are not sufficient. Why do we need extra accounting standards? Suma, extra work for you, extra work for me also. Unnecessary extra, no. Sir, when initially accounts, no, my voice is lower. Is the audio on the lower side online, people? Or is it fine? It's fine, huh? Okay. All right. Great. I'll try to increase the volume here and see if it can capture it. So now is it better? All right. Awesome, people. Sir, yes, golden rules, when you started out the accounting rules were pretty basic. You had some purchases, you had some sales, you had some cash expense, etc., etc. So initially those rules that was laid out, that was sufficient. But these days things have become very complex and diverse, so that you needed some extra guidance. Your golden rules was not sufficient. Just to give you some examples, they could have thought about hundreds of examples. I'll give one or two just to give you some clarity. Sir, do you know depreciation method? Okay, what are the depreciation methods, sir? Either you can go for straight line method or WDV method. Which to select? Income tax act. Don't bring your yard of income tax over here. Power generating unit. Straight lines are all other WDV, sir. That is for income tax act. We don't give a damn about income tax act. Accounting runs on accounting standards, Companies Act rules, and our mother body ka guidance. We don't worry about income tax act at all. Okay. So the question is which method to select. Okay. Now I'm not asking a question. I'm saying you some pointers. Does your golden rule answer this? No. Sir, suppose you have a land. You bought it for 10 lakh rupees. Meaning the carrying amount of that land is 10 lakh rupees. Market value is a 10 crore. I bought it for 10 lakh few years ago. Land we don't depreciate. Currently its market value is 10 crore. I should show this land in my books at 10 lakh or 10 crore. 10 lakh or 10 crore. Golden rules is answering. No. Somebody filed a case against me. Okay. And he's demanding a compensation of 10 lakh. Tell me, should I record this, ignore this, show it as contingent liability or what? Don't know. That means, is your golden rules really sufficient to answer everything? No. So you needed a lot of guidance like this. Like you gave shares to the employees. Or maybe I'll give you another example. Let's say you are constructing a building, or you are a contractor, you are an architect. Your job is to construct a building, not for your use, somebody else's use. Somebody approached you, you are the architect and you are constructing a building. And you told to construct this building, I need a 10 crore rupees. That means this is your revenue. You will construct the building and you will receive how much money? 10 crore. Sir, the building or construction will happen, or building will get completed by the end of 3 years. If you start the construction now, it will get completed by the end of 3rd year. Sir, I'm an architect. That means this is revenue for me. Correct, ma'am? This is a service we are giving. Should I recognize this revenue in year 1, year 2 or year 3? Should I recognize the revenue now where I've started constructing the building, or should I wait till the building gets completed and then recognize the revenue? Is your golden rules answering? No. So you needed some guidance. Like this, 101 confusions are there. In fact, thousands of things there are confusions which your golden rules are or will not be able to answer. Hence, there was a necessity for accounting standards. All this, whatever I told, no, each standard we have. Like for first two, we have accounting standard 10 that covers. For this one, we have AS 29 that covers. For this, we have accounting standard 7 that talks about it. Like this, each is specific. Don't worry about the answer for all of that. All of that answer you'll get as and when we cover individual standards. But the point of giving this example was that there was some clarity required with respect to few areas because the existing rules are not sufficient. That is where they went ahead and introduced something called accounting standards. As accounting standards, somebody rightly pointed out, these are just some extra guidance given relating to accounting matters only, because our existing rules are not sufficient to decode a few things. Okay, so far everybody? Okay. Accounting standards are basically policy documents issued by the government. So accounting standards are published documents. It's a gazetted documents. So it is published by the government. Normally for corporate entities, MCA, Ministry of Corporate Affairs, they publish this. For non-corporate entities, ICAI publishes it. For corporate entities, the publishing this accounting standard is whose headache? MCA, Ministry of Corporate Affairs, their headache. For non-corporate entities like sole proprietor, partnership firms, etc., etc., ICAI has taken the responsibility of releasing the accounting standards. Okay, sir. All right. First, any standard, no sir, for that matter, any accounting standard, doesn't matter. It's not only accounting standard, even if you talk about Ind AS, accounting standards are local standards issued by whom? Our mother body has taken a lead in accounting standard. So who's going to draft all the accounting standards in India? The preparing, etc., is whose responsibility? I say. Only publishing is done by MCA. We have to do it and give it to them, and they will finally say Jindabad. Like that. Okay, they take the credit, but ultimately we do the hard work. So ICAI drafts all the standards. So accounting standards are basically local standards. It is applicable only to the Indian entities. Ind AS or IFRS are international standards where many countries have adopted it. That is the difference. Is it okay? Accounting standards are local standards which will be applicable only to India. That we call it as local gap. Accounting standard, we call it as local gap. Okay, but Ind AS is your international standards, which you will study about Ind AS in CA final. For now, all your discussion will revolve only around accounting standards. Sir, accounting standards, no, cover only any standard for that matter. We have 30 plus standards or maybe 28, 29. It's okay. We'll one by one, we'll knock off. Any accounting standard for that matter will only cover 4 areas. Any or every accounting standard will only talk about, sir, 4 areas. That is RMPD. RMPD. R for recognition. Once I'll tell and then give you an example and connect with this. Recognition, measurement, presentation, disclosure. Recognition, measurement, presentation, disclosure. That's all each standard ka scope is all about. Okay. Let's take a small example. Sir, suppose you didn't like my classes. You didn't like my classes. You could have at least told me, no. But you went one step ahead. You filed case against me, sir. 50 lakhs compensation. 50 lakh compensation. Okay. So, you filed a case against me demanding 50 lakh compensation. Sir, now legal case is going on against me demanding a compensation of 50 lakh. Now the question for me is, what should I do for this 50 lakh? First thing is, this is covered by AS 29. Forget about that. AS 29 we'll talk about later. Overview of what a standard I told covers only recognition, measurement, presentation, disclosure. Now, first headache for me is, you are demanding how much compensation, sir? 50 lakh. first headache for me is, should I recognize this liability in my books or not? That is what AS will give you a guidance. First thing, should we record this or not record this? That is the first headache. That only we call it as recognition. Recognition covers whether we should recognize or not. That's the first aspect. Clear, sir? Second, okay, I decided that, all right, you have a strong case, you may win. That means I decided that I will recognize it. Next question will be M, as in measurement. So the next headache area for me is, okay, I decided that I have to book this liability, but I have to book this at what value? You are demanding a compensation of 50 lakh. Ultimately, do you think I have to settle 50 lakh or maybe more or maybe less also? So the next question is, how much value I should recognize this liability for? That is a measurement area which standard guides us on. There, all of us still here? Recognition over, measurement over. What is the third one? Presentation. Okay, you've decided that you will show this liability. Let's say I decided that I will show this liability and I will show it at 10 lakh rupees. I did some estimates and it came to how much, sir? 10 lakh rupees. So I recognize this liability at 10 lakh. The next question is, where should I show this liability? Should it be shown as a non-current liability or should it be shown as a current liability? That is your presentation wala headache, which accounting standards will give you the guidance. Okay, whether a particular component should come in P&L or should it come in balance sheet. If at all you say P&L, which side? Under revenue or under other income or under expenses. If at all expense, which expense? If you say balance sheet, whether an asset or a liability. Asset means what? Current asset or non-current asset. Liability means non-current liability or current liability. So these are the guidance areas which accounting standards try to answer. That comes under the presentation aspect. Can I go for the last one? Last one is what, sir? Disclosure. Sir, I showed this as a non-current liability, let's assume. Okay, I made a provision. Let's say I created an account called provision for damages. Provision for damages, and I booked this provision for how much value, sir? 10 lakh. This provision is appearing in the balance sheet for how much value? 10 lakh rupees. I give this financial statements to you. In that financial statement, balance sheet will be there. In balance sheet, you are able to see provision for damages for 10 lakh. By looking at that, will anything make sense to you? Just one provision for damages is there for 10 lakh. Do you know the background behind it? Why this damages has come? What is the reason for it, etc., etc.? If you are an investor in company, don't you want to know additional information about this? Won't you want to know more about this? Why is this damages for? How it has come, etc., etc., etc. All that additional information, we give it in notes to accounts. That we are calling it as disclosure. Disclosure is simply giving some additional information so that people will understand financial statements better. That's all. So these are the 4 aspects which every standard tries to cover. Got it, everyone? Okay, no? You will not file case, no? You understood, no? Again, if you saying 50 lakhs आप दोगे तो yeah, definitely I will put, yeah. Okay, so come back once again, people. Accounting standards are simply some written policy documents issued by whom? The government. Who is taking the lead responsibility in drafting the standards? The pride, us basically, which is the ICAI. Okay, but for corporate entities, for companies who publishes the standard, MCA, Ministry of Corporate Affairs. For non-corporate entities, who publishes AS? ICAI. And what does accounting standard cover, or any AS for that matter, covers only, the scope is only 4 things. RMPD. Recognition, measurement, presentation, disclosure. To recognize something or not recognize something. If at all you say recognize, how much to recognize it for? That's your measurement. Presentation is where to show it, in P&L, in balance sheet, which category, etc., etc. Last is giving some extra information so that it will help the users to understand it better. That's your disclosure. That's all. These are the 4 aspects. Can I move on to the next one? Online also good till here? Super, sir. Next one, sir. Benefits of accounting standards. So what are the advantages of accounting standards, sir? Sir, accounting standards are basically rules. Can you follow one rule, somebody else will follow another rule, or it will be same? I mean, it will standardize the process. Everyone is following the same thing. I mean, some confusion and all is gone. Like initially when I gave you all this, there was some confusion. Maybe some of you said WDV, some of you said straight line, some of you said book value, some of you said market value. Like that, there was some confusion. So when through accounting standards, you are able to set one template, meaning you are able to give one treatment which has to be followed by everybody. That means that confusion in accounting will be done away with, or it will be sorted. So one, your process will get standardized. That's one. Second aspect is, sir, I want to invest. Let's say I have, 10 lakh rupees. I want to invest either in Tata consultancy company or Wipro, or let's say Infosys, more comparable, right? TCS or Wipro ka shares I want to buy. But I want to buy only one company ka shares, not both. How do I select, sir? How do I select? I'll compare their company ka financial statements, balance sheet, P&L, cash flow statements, all this I will compare. If Tata is doing one accounting treatment, Wipro or Infosys is doing another accounting treatment, can I compare those two financial statements and arrive at any decision? No. But if they are following same thing, then I can compare and take the decision. So through accounting standards, you can make the financial statements comparable, because every company is doing more or less the same thing. So it will make financial statements more comparable so that the user can take his decisions better and more efficiently, more quickly. Done. Another advantage is requirements of additional disclosure. Sir, you tell me, if standard AS29 actually requires few disclosures, suppose there was no accounting standards, do you think company will give additional disclosures? As a company, do you think we would like to give additional disclosure? No. Because especially if it is negative news, we would like to cover up as much as possible. Because the more negative news you release, share price, correct or no? So that means as much as possible, company will try to hide it. But what does AS will say? Boss, disclosure required means disclose only. Whether it is good or bad, doesn't matter. You have to disclose. That is fair, correct? No? So that means you tell me, by giving this additional disclosure, is it good for the stakeholders or is it bad? Good. Because they will get to know more information and take the decisions better. That is one of the advantages. Requirements of additional disclosure, because if it was not there, no company would have given additional disclosure, or you could say 99% of the company would have not disclosed. Okay, especially if it is negative news. Now also they try to hide as much as possible. Okay, but if it was not there at all, means none of them would have given, mostly. So hence that could be one of the advantages. You'll not get some straightforward questions here, but there, so quickly covering. That's all. Can I move on to the next one, people? Next is standard setting process. How the standards get set. Sir, ICI is a body, means there will be lakhs and lakhs of members. Correct? No. So in your college also, there are various departments. Accounts department, some HOD, this physics department, economics department. Like this, we have various departments. Correct? No. And cash department. If you have cash department, what do you think their job is? If you have any cash department in a company, what do you think will be their job? Receive cash or pay cash, probably. Yes. Same like that, even in ICI also, there will be many things which ICI also manages. So for accounting standard, no, they have set up one body or board called Accounting Standards Board. Our ICI has set up one board called Accounting Standards Board, or we popularly call that as ASB. That ASB, no, formulates the standards. They have taken a lead in forming the standards. So how the standard setting process works is, first this ASP group, no, they will identify for which area you need to form standards, for which area you need to make a standard. So that is their first job. Identify the broad areas for which an accounting standard is required. Like these days, probably they're contemplating about cryptocurrency. How should be accounted? There's some confusion around it. Okay. I think I'll not go there because that topic is not there in your CA entry. It comes in CA final. Either you should treat it as a financial asset or it should be treated as intangible asset. There's some debate going on there. Okay, so that means some extra components may come in there. You don't know what is financial asset. You'll learn it in India's 109 later on in CA final. So I'll take back that word. Come back now. So what is that, sir? What did I say here? ASB will decide for which area an accounting standard is required. Okay. And then they will form a study group. ASB also will have many members. No? All the members, if they come together, they say, no, too many cooks will spoil the dish. Okay, so we don't want that to happen. So ASB will form a study group. Like they may have like 10 or 15 members who are experts in that domain. They'll all come together and start forming the standards, some rules, how it should be accounted. If this comes means how and all should be accounting should be done. They will frame these rules. Okay, they'll frame a draft standards. One draft standard, they will form it. Once the draft is formed, sir, they will circulate this. To whom and all? To all the interested party. Like CA Institute CA Institute is formed, but it affects your CS, ICI also, ICSI also. So this particular draft standard will go to company secretary ka board, cost accountants ka board, RBI, SEBI, direct tax ka, CBDT, Central Board of Direct Taxes, to all of the interested parties. This draft will be circulated and they will say, do you have any comments? This is the standard I have draft. Do you have any problems with this? If you have any problems, please write your comments, give your review. If you receive any comments, again, they will consider that and make some changes to the draft if they feel it is a problem. Then what happens? Then finally, ICA will have a council members, right? The council members will accept the accounting standards. Once these accounting standards are accepted, it will be given off to MCA and they will publish it. Or for non-corporate entities, ICA itself will publish it. This is your standard setting process. What is it again? First, who is taking the lead? ASB, Accounting Standard Board. Their first job is to identify for which area accounting standard is required. Then they will form a study group. That study group will consist of experts in that particular area. Those study group will work upon the draft standard. Once the draft is ready, they will circulate this draft to affected person, whoever it is, they will circulate and ask for any comments. If comment is received, they may consider it depending on what it is, etc., etc. And then finally, the draft standard will be accepted by council. Once council accepts it, it becomes final from ICI side, and this will be given off to MCA and they shall publish it. This is a standard setting process, not that very important, but just say. Okay, great. Next one is the thing that you're going to learn in your next level, which is Ind AS. Ind AS is nothing but Indian Accounting Standards. Sir, you have something called IFRS, International Financial Reporting Standards. These are international standards. What India has done is, we have not copy pasted IFRS. We have not taken IFRS as it is and published in India. We have taken IFRS and wherever required, we have made some changes. Wherever required, because see sir, every country accounting is same. Some dynamics are different. Yes or no? Between India and US and India and Europe, maybe majority are same, but some of the things are different because India is a lot more diversified. Our economy is probably a little weaker when compared to their economy. They are developed countries. We are still developing countries, but we will become a lot more bigger in the coming years, but that's all right. But that means there will be some changes required. So what we have done is we have taken IFRS and we have made some tadka, masalas we have added as per our Indian needs. And hence we are not calling it as IFRS. We are calling that standards as Ind AS. So IFRS and Ind AS more or less same. You could say 95% of the things contents are same, except a few things, there are differences. That differences we call it as carve out. Any difference between IFRS and Ind AS, we call it as carve out. Like if Ind AS, IFRS says go left, Ind AS is saying go right. IFRS is saying go left. Ind AS is saying go right. That means same or different. That differences we call it as carve out. I think as of now, if my memory serves right, there are only about 4 or 5 carve outs currently. That means only with respect to 4 areas, there are some differences. Otherwise, everything is pin to pin same. Okay, sir. Now, no point in discussing this with you because you don't know Ind AS. Do we know? First of all, do we know AS? No. That means discussing carve out and all at this stage will make sense. Just the meaning is good enough. Carve out means what? The differences between IFRS and Ind AS. MCQ question it may come, so discussing this. A little bit more about all this will come in CA final stage. Okay, the next question is, sir, which company have to follow Ind AS? Actually, this is foolish. I don't know why they brought in this, because Ind AS is totally a topic for CA final. I don't know why they brought in this into our inter material, but it is there, means my responsibility and your responsibility to know a little bit. Okay, so quickly we'll run through this. Okay, maybe important for final, but here I don't know. So far I've not seen question, but it could come also. You never know. Institute is full of surprises. Some suddenly they may put one surprise of this. So which companies has to follow Ind AS? It's actually very simple. Criteria is Ind AS first get started, or it's applicable from 1st April 2016. 1 year before that they gave it voluntarily. You can leave voluntary. From mandatory basis, meaning compulsorily, Ind AS is applicable from 1st April 2016. For which companies? One company, sir. Whether it's a listed company or unlisted company. If their net worth, if it is greater than or equal to 500 crore. If their net worth is greater than or equal to 500 crore, all such companies have to compulsorily apply Ind AS. Accounting standard is not applicable. They have to compulsorily follow Ind AS and Ind AS 1 only. Same thing is there in CA final also. Learn this. Next topic over. I mean, next level ka one topic over for you. Chiller this is anyway. Okay, but anyways, are we okay with this, sir? This is one thing. Any company, whether listed or unlisted, if their net worth is greater than or equal to 500 crore, then Ind AS is applicable to it. That is one. Sir, it need not be listed. Meaning, what the standard says is, and sir, what can you list in your stock exchange? Only equity shares or debentures also? Debentures. So listed here means it could be, I think they're not called out, or here they're called out. Leave, okay, maybe I'll discuss this. You can list your equity shares, or for that matter, you can list your debentures. If your any instrument is listed, automatically Ind AS will be applicable. If your net worth is how much, sir? 500 crores or more. And it's not necessary that you have to list only in India. If you have listed outside India, that is also acceptable here. So that means here, when we say, when you talk about listing, it means what? Listing of equity shares or debentures. And that listing can happen in India or abroad. Or if you are in the process of listing, such company also will come under this umbrella. Meaning I filed papers with SEBI to get it listed. Not yet listed, but I've already submitted the papers. Even they also comes under the aspect of listed companies. Listed companies means already listed. What can be listed? Shares or debentures. Where it can be listed? India or abroad. If I'm not already listed, but if I'm in the process of listing, that will also come under the definition of listed. That's for such companies, Ind AS will be applicable from 1st April 2016. Okay. Next year beginning date is what, sir? 1st April 2017. They bought Ind AS in phases. Ind AS, there is a lot of changes between AS and Ind AS, so they gave a lot of time gap. First, for this we call it as phase 1. From phase 1, mandatory was applicable from which date, sir? 1st April 2016. Phase 2 came 1 year later, which is 1st April 2017. In phase 2, what they told, they told all listed companies. All listed companies have to compulsorily follow Ind AS. Doesn't matter whether the net worth is 5 crore, 10 crore, 500 crore, 5,000 crore, doesn't matter. If you are listed, you automatically have to follow Ind AS, not AS. You have to follow Ind AS. And what does the listed word here mean? Listed means you could have listed either your equity shares or debentures in India or abroad. You could have already been listed, or you are in the process of listing. All that will come under here. If your net worth is more than 500 crore, you come under phase 1. If you are not under phase 1, then automatically you'll come under phase 2. Or indirectly, if I have to tell now, in today's Zamana, every listed company have to compulsorily follow Ind AS. That means, why are we studying AS for? We have other entities also, no? Private companies. Yes, for that. So some companies in India are following still AS. Some companies are following Ind AS. So that's the reason we need to know both. At this level, you learn AS. Next level, you learn Ind AS. That way, you will become a complete package. Okay. So this is about listed company. What about unlisted companies? For unlisted companies also will come under phase 2. For unlisted companies, if Ind AS is applicable in phase 2, means their net worth has to be half of this. What is half of 500 crores? 250 crores. If their net worth is 250 crores or more, then Ind AS will be applicable to such companies on 1st April 2017. If you are unlisted and if your net worth is 500 crores or more, then you come under which? If your net worth is 500 crores or more, you come under phase 1. Okay, if your net worth is 250 crores or more, but less than 500, then you come under phase 2. So what if your net worth is only 50 crore? Ind AS is not applicable for you. AS will be applicable. Like this MCQ question could be found. Are you following is the AS or Ind AS? Such a smart one, I tell you. See, he's not asking over turnover. He's asking over AS or Ind AS. Balance, we'll figure it out. Okay. So, but basically everyone understood this. So based on net worth, they have given the criteria whether you have to follow AS or Ind AS. This is for the normal companies. Let's have a quick recap again. MCQ, not that important, but still, I told you, whether it is 1 mark or 2 mark, we will give equal importance to that. So you have to follow Ind AS mandatorily from which date? Under phase 1. 1st April 2016. If you are a listed company and if your net worth is 500 crores or more, then phase 1. If you are an unlisted companies but net worth is 500 crores or more, still phase 1. Second phase ka date is what, sir? From 1st April 2017. Listed company by net worth is only 5 crores. I'm a listed company, my net worth is only 5 crores. First of all, is Ind AS applicable to me? Yes. Which phase? Phase 1 now, phase 2 now. If I have to come under phase 1, my net worth has to be 500 crores or more. Is it 500 crores or more? No. That means I will fall under phase 2 because all listed companies gets covered under phase 2. Can unlisted company get covered under phase 2? If their net worth is 500 crores or more, they come under phase 1. If their net worth is half of that, which is 250 crores or more, they come under phase 2. So Ind AS will be applicable from 1st April 2017. None. Okay. All right. Sir, if Ind AS is applicable for your company, I think you must have studied this, no? A Limited, sir, has 90% shares in B Limited. A Limited has 90% shares in B Limited. We call A Limited as what? We call A Limited as the holding company and B Limited as subsidiary company. Yes or no, sir? Correct. So if your subsidiary is following Ind AS, means holding company also a bumper offer. If they are following Ind AS, then holding company also has to compulsorily follow Ind AS. Cross connection. If holding company is following Ind AS, even if net worth of B Limited is less, still they have to compulsorily follow. Like one is following, other one also has to compulsorily follow. That's what they've written here. Okay, parent, subsidiary, associate, and joint venture. We'll study about more associate and all later. It's newly added into your syllabus now. Okay, we'll study about that. But parent, subsidiary, you got it now. What is associate, joint venture? We will study as and when we go along. Done. Okay, this is about for companies, sir. For companies other than banks, NBFC, and insurance. For banks and insurance company, Ind AS is still now not applicable. There's some lot of confusions, especially with respect to banks. There are a whole lot of drama going on. Every banker is telling, I'm not ready for Ind AS. There is a lot of changes happening. So as of now, the way things stands for banks and insurance company, Ind AS is not applicable. For NBFC, Ind AS is applicable. First, what was the date? 1st April 2016. Next, 1st April 2017. Go 1 year afterwards, which is what? 1st April 2018. That is the phase 1 for NBFC. 16, 17, 18. So 1st April 2018 onwards, Ind AS is applicable for NBFC. NBFC means non-banking financial companies. Like you have Bajaj Finance, Muthoot Finance, and all this you have, no? India Bulls housing companies. All those companies are NBFCs. Basically, their main funda is what? To give away the finance or to make the investments. So if you are an NBFC, Ind AS is applicable from you first time, not before that. Ind AS is applicable only from 1st April 2018. So what is the limit? Same limit. Tell me that limit. What is that? Listed, unlisted. What is that? For phase 1, whether you are a listed company or unlisted, if your net worth is 500 crores or more, you have to apply from 1st April 2018. Same as old limits. No change. That is on phase 1, 1st April 2018. Next will be phase 2. Phase 2, what do you think will come on? 1st April 2019. You tell me. What will be the phase 2 limits of NBFC? All listed NBFC will come under phase 2. Unlisted NBFC is also covered up. Yes, half, which is what? If you are an unlisted NBFC and if your net worth is 250 crores or more, you will fall under Ind AS. Limits are same. So quite easy to remember also. Okay, sir. That's all with respect to Ind AS. Okay, and as I told you, for banks and insurance company, till now, Ind AS is not yet made applicable. Let's see. By the time it is made applicable, probably it would have become chartered accountants, I think. Because it was, the due date was 18 or 19. From 1819 it became 21. From 22 it became, now they're saying 2025. We'll see. God knows when it will come. We'll see. Okay. You'll see also the challenges later on when we go to CA final. Why are they hesitant in accepting it? Why they're not following? Right now, this is not the juncture to discuss that. I'll have to give you a whole round of things for India's 109 and all. No, not the good stage. If you want to have some media on made of YouTube video, you can watch that. Actually, better don't watch. Leave. Not the right level. Wherever you are, that time you should watch it. It'll make more sense. At CPT level, if you had probably discussed all this, then it would have been not so good. At that level, you should discuss few things so that it'll become easy. Okay, sir. Now the next question is, we'll come back to our main mudda or main topic, which is what? Accounting. Applicability of accounting standards. Sir, which companies or which entities have to follow accounting standards? So it doesn't matter whether you are a corporate entity or not a corporate entity. If you are doing commercial activities, being buying goods, selling goods, giving service, etc., etc., then compulsorily you have to apply Ind AS. Doesn't matter whether you are a charity company, normal company, whatever company. If you are doing what activity? A business or industrial or commercial activities, then Ind AS is AS is compulsorily applicable for you. Okay. But suppose you are doing, your job is only this. You accept donations and you give off donations. No other service. You just take donation. 100 rupees if you get donation, same 100 rupees, you give it off to the needy people. Then AS is not applicable, because are you doing any commercial activity here? No. So if you are doing these sort of things, meaning non-commercial activities, then AS is not applicable. Rest every entity, doesn't matter whether you are an LLP or a partnership firm or a sole proprietor or a company, doesn't matter. AS is still applicable. A stands for accounting standards. Work. Two more, I think, or three or more concepts. If you know, there are some questions, the chapter will be over. Chintu topic. Okay, 3-4 marks. Could come, has come. It'll come in your attempt or not. You tell me after writing the paper. I don't. So far, all of us goody. Now, sir, there are a lot of accounting standards. I think 28, 29 or whatever. I forgot last time. They're withdrawing few, they've added a few and all. Okay. So let's keep it as roughly 25 plus standards are there. Okay. Sir, there is a small vegetable vendor. Okay, small person who's doing a normal turnover. Now you went to him one day and told, I've studied accounting standard now. You are my first client. Come. I will apply or I will implement AS for you. And you told him 10 lakhs fees. That's all. Where you will find? My boss will charge 50 lakh. I am his article, so I am charging 10 lakh rupees. Okay. Do you think it will be workable? That means what? Sir, okay, accounting standards are very good because they give a lot of extra information. So overall, it will help everybody. But at the same time, it should not be detrimental to the business. It should not pull down the business only. Because if you charge 10 lakh from him, he will say, you keep accounting standards and you keep my shop also. I don't want it. Yeah, you will only run. Correct, it will not work out. Since they have told, no, they have told few standards, let's give some relaxation. Let's give some, meaning those standards, they need not apply. Correct? Can you give this relaxation to big companies also? No, it has to be based on the size. So our mother body, ICI, has categorized non-corporate entities. What did I say? Non-corporate entities into 4 sectors. Level 1, level 2, level 3, level 4. So if you are level 1, you are super duper big organization. You have to follow every accounting standard. If you are a level 2, level 3 or level 4, some relaxation will be given to you. Got it? So that's what we are about to study now. Level 1, 2, 3 and 4. So the next question is, so which organization will fit into level 1? Which one into level 2, level 3, level 4? There should be some limits. You may have to remember this because based on this, we have next 2-3 questions. That's all. So this is important as far as probably this topic is concerned for examination. One, sir. Simple. Level 1 entity means it's a non-corporate entities whose equity, shares or debt is listed. Listing could be in India or abroad, or you are in the process of listing. You are already listed or you are in the process of listing. If you are such an entity, then you automatically come under level 1. Generally, we don't see non-corporate entities and all listed, but they have just brought in the limits. What if SEBI changes the provisions later on? And so even partnership firms can get listed. So keeping that in mind, maybe they've framed this rules. But majorly you see right now is what, sir? All only companies or corporate entities getting listed. But anyway, limits are there, so let's not question it. Let's just go with the flow. So what is the first limit? Level 1 entities are those entities which are already listed. Listed could be related to equity instruments or debt instruments. It could be in India or abroad. You're already listed or you're in the process of listing. For all that entities comes under level 1. Second one, if you are a bank, if you are an insurance company, or if you are an NBFC, finance company, you're automatically a level 1 entity. You don't have to check anything else. If you are a bank, insurance company, or a finance company, you automatically come under level 1. If you are not any of this, they have set 2 limits, and those 2 limits you have to remember. If you are not any of this, no, they've given 2 limits, one with respect to your turnover, another one with respect to your borrowings. If your turnover exceeds 250 crore, you are a level 1 entity. Okay. Or if your borrowing exceeds 50 crore, borrowing means the money you have taken, including public deposits. If your borrowing exceeds 50 crore anytime in the previous year, in the last year, if your borrowing is 50 crores, more than 50 crores basically, automatically you come under level 1 entity. You have to remember these limits. They will not give it to you. They will give you a question. They will give you turnover of company so and so, borrowing of the company is so and so. You need to identify whether such an entity is level 1, level 2, level 3 or level 4. That sort of questions will come from this particular topic. So limits are important. Okay, let's remember that once again. Level 1 entities means what, sir? Already listed or in the process of listing. India, abroad, or equity or debt. That is one. Next one. Bank, insurance company, or NBFCs or finance companies. Third one. Your turnover is 250, more than 250 crore. You're borrowing more than 50 crores. That's your level 1 ka limits. Done. Now the level 2 ka, it's very simple. This is for level 1. How you can remember level 2 is, here also same, turnover and borrowings. What was the borrowing limit here? 50 crore. Turnover limit for level 2 is that. So here turnover will exceed 50 crore, but it will not exceed 250 crore. So if your turnover exceeds 50 crore, but if it doesn't exceed 250 crore, then you are automatically under level 2. So just take the same limits and construct this equation. That's all. Okay, sir. That is your second limit. It's given over here. Turnover exceeding 250 crore, but does not, turnover exceeding 50, but does not exceeding 250 crore. Now borrowing. Borrowing exceeds 10 crore, but does not exceed 50 crore. Borrowing exceeds 10 crore, but does not exceed 50 crore. If you are such an entity, then you come under level 2. Okay. Level 3. If you are doing it for level 3, what is the borrowing limit for level 2, sir? 10 crore. That becomes a turnover limit for level 3. So here draft the equation for me. Turnover should exceed 10 crore, but it will not exceed 50 crore. That is the level 3 ka turnover limit. Exceeds 10 crore, but does not exceed 50 crore. And borrowing exceeds 2 crore, but does not exceed 10 crore. These are the limits you are expected to remember, people. Level 1, level 2 and level 3. If you are none of the above, you become level 4. If you are failing all this criteria, then you come under level 4. Sir, why all this drama, sir? I'll tell you, but overall, are you able to remember? You have to remember this, people, otherwise 4 marks gone. It can come for 4 marks also, 2 marks also, depending on that. If you know the limits, these are very, very straightforward topics and aram se 3 to 4 marks in your pocket. Otherwise, Tirupati Nama. I'll give you a minute. Understand this. If you have got this, I'll take up one question. That way, I'll get to know how much of it you have remembered. Take 2 minutes and understand. Yeah. If holding company comes under level 1, then subsidiary company also under level 1. That connection is still there. Yes. Holding subsidiary, any of the above. They'll not ask much of that question, but they'll give you a straightforward limits. Could be. Someone is saying we're doing some extra SEBI initiative is doing. Could be. I've not observed that. Maybe. Quite possible. Remember, try to remember this, people. Then we'll go for one question. I'll tell you which question is that. No, you can screen. Dekho. Yes, people? Okay. We'll go for question number 1. Sir, this is the limits for what entities? Corporate or non-corporate? Non-corporate entities are categorized into level 1, 2, 3 and 4. Corporate entities, there is a different thing. One second, I'll come to that. So this question is all yours if you are able to remember those limits. Omega and Co, a partnership firm. Obviously, a partnership firm is a non-corporate entities. Sir, their turnover is 1.25 crores. Turnover is 1.25 crores. And their borrowing is 0.95 crores in the previous year. Great. It wants to avail exemption. As I told you, for level 1, no exemptions are available. But if you are a level 2, level 3 and level 4, you do get some exemptions. I'll tell you what are those. First, you identify this for me. They want to avail exemption with respect to application of accounting standards to non-corporate entities for the year ended 31st March 2021. Advise the management whether they can take this exemption as per the directions given by ICAI. Tell me, sir, which entity is this Omega? First of all, tell me the limits again. Let me write it once again for you. What is the level 1 ka limits? Maybe I'll write it over here. 1 second. This is turnover. This is borrowing. For level 1 entity, the turnover is exceeding 250 crore. Borrowing exceeding 50 crore. Awesome. For turnover, level 2 entity, turnover exceeds 50 crore but does not exceed 250 crore. Borrowing exceeds 10 crore but does not exceed 50 crore. Level 3 entity, turnover exceeds 10 crore but does not exceed 50 crore. Borrowing exceeds 2 crore but does not exceed 10 crore. Level 4 is Goinda scenario. Not a level 1, level 2, level 3 means automatically level 4. Now you tell me, sir, where is this particular Omega way fitting? Turnover is 1.25 crores. Borrowing is 0.95 crores. 1.25. 1.25 means obviously it is greater than 10 crore or less than 10 crore. Less than 10 crore means obviously it is coming under level 4. Okay. And borrowing also, one of the things if they're satisfied is good enough. What is the borrowing, sir? 0.95. Is the borrowing exceeding 2 crore or not exceeding? Not exceeding. So this Omega falls under which category? Omega falls under, somewhere they would have written. They have written the criteria. Omega falls under level 4 entity. Okay. That means can they take the exemptions? Yes. So the next question is, sir, what is the exemption available? I'll write this down. If there are many things, okay. Partial exemptions, disclosure exemptions like that they have given. Maybe a little difficult to remember everything. I'll tell you a few things. At least try to remember that and write it in the examination. That should be good enough. Write this down maybe. The exemption, somewhere in your notes you can write it. I think I have bought it in. Okay, instead of hunting, I'll write it off once again here. Exemption is AS3, 17, 21, 23, 27. Not applicable. Not applicable for level 2. For level 2, level 3 and level 4. Accounting standard 18 for level 1 and 2 applicable. For level 3 and 4 not applicable. If possible, try to remember this. If you're not able to remember, just write it is an level 4 entity and they can take some exemptions. Don't write incorrect numbers and all. Accounting standard 45. That much is not even there. Don't create your own numbers. If you can remember the right names and numbers, write it. Otherwise, leave it off. It's okay. It's not your bus number. People do that creative aspect, I tell you. Sir, if you are having that attitude of filling the pages, no, throw away that attitude. That doesn't work in CA examination. Many people have that notion in BCom. the length of the solution, the more and more it is, you'll get better and better marks. You have to fill 20 mark or question means at least 4 pages, 5 pages minimum you should fill. Doesn't matter, say write the same thing, but still write it for 4 pages. Don't do all that nonsense in CA, it will irritate the evaluator big time. People actually read, I don't know about BCom, I don't want to comment, okay? But in actual CA paper, people read and award the marks. And just like based on your solution, length of the solution, people will not give marks. Obviously, if you're writing the same thing, people will get to know and it irritate them. And sometimes, the marks is based on invigilator. Especially if you have done half correct, half wrong. How much marks to give will be based on invigilator ka. So if you already irritated him, he may give you this guy irritated me. I will make you come again. CA for you is not chartered accountancy, it becomes come again. So don't do that. Whatever point is relevant, write it. Don't worry about 3 points, 4 points, 1 page, page. How much ever you know and how much ever is accurate, write only that much. Okay. Alright. So this is your exemption. Understood, sir? Simple way to remember. AS3 for cash flow statement, or don't have to worry about the names, leave that. AS3, 17, 21, 23, 27. This is not applicable for level 2, 3 and 4. If you can remember this one more, great. Otherwise, it's okay. At least try to remember this much. Accounting standard 18, that is that related party disclosure. For level 1 and 2, it is applicable. For 3 and 4, it is not applicable. First of all these are exemption for what, sir? For non-corporate entities. So if you are a non-corporate entities, from following AS, you can take the exemptions. Some partial exemptions are also there. You leave that out. That may be a little difficult to remember those in examination. Write this much. That is sufficient. AS 18 for level 1 and 2 applicable. For 3 and 4 not applicable. That's what I've written. Anyway, every standard is there. Don't worry about it. What each standard talks about it. Before starting accounting standard, I wanted to give you an overview of AS and then start. From next class onwards, we'll be starting with accounting standards. Before that, I wanted to cover this. That's the reason we have taken this topic, and also only we had a little time, not today. So that's the reason, Chintu topic. Okay, now this is done. Any doubt, anybody? Now, one more thing. Sir, suppose in 2020-2021, in that year, 1st April 2020 to 31st March 2021, you were level 2 entity. In this year, no sir, you were level 2 entity because your turnover and your borrowing was fitting into that limit. So you were a level 2. Sir, next year, that is 1st April 2021 to 31st March 2022. Sir, you became here, big. You became big, meaning you became level. Level 2 is smaller, right? So level 1 is much bigger. So you became big company now. Now, one second. Here, last year, was AS exemption available to you? Let's say it's a non-corporate entity. In the last year, was accounting standard exemptions available to you? Yes, AS 3, 17, 21, 23, 27. Those are exempted for you. That means you took some exemptions or AS exemptions here. Current year, can you take exemptions or no exemptions? Since you are a level 1 entity, you have to apply all the standards because you're a big entity now. You can't give excuses. Well, that's all right. Current year, we will take no exemptions. Rather, we will apply all the accounting standards. Problem was not that. The problem is, sir, whenever you prepare financial statements, do you give only current year data or will you also give previous year data? Have you seen any of the annual reports? Or if you don't know also, normally we don't give financial statements only for current year. We also give previous year data for comparison. Okay, because we want to compare current year things with last year. No? Now, current year, did you take any exemptions or no exemptions? Current year. No exemptions. Previous year, you took exemptions. Like AS3 stands for cash flow statement. Current year, your financial statements will have cash flow statement. Last year, no. AS17 is for segment reporting. Current year, you will have segment reporting. Last year, you will not have segment reporting. Now, the one question which was raised before ICI was, should I have to prepare this last year also? Should I have to give this information? Because like here I'm talking about segment reporting. Should I have to prepare segment reporting here? Yes, that is AS17. Should I have to prepare it? Yes. Current year I have to prepare it. But last year, have I prepared it or have I taken exemption? Taken exemption. So for comparison purpose, again, should I prepare it? That was the doubt or question that was raised. And ICA has taken a relaxed view and told, chill, not required. Not required. Last year you were actually small entity, no? So you took some exemptions, right? So for comparison purpose, again, you don't have to prepare those standards. Whatever exemptions you have utilized, let it be as it is. That means these two statements are pin to pin comparable. Or can you straight away compare them? Sir, one has one report, another one doesn't have that report. So do you think they are pin to pin comparable? No, but still standard has given you a leeway that it's okay, macha, chill pill, not required to be done. Just give a disclosure. Just write one note saying, I was a level 2 entity last year and I took some exemptions. This year I have become level 1. So exemptions is no more available to me. But last year data, again, I have not restated. Last year data, again, I have not restated or prepared last year. Last year, whatever exemptions I've taken, I have not let go of it. I've kept it as it is. That disclosure of that fact you give, that is sufficient. No need to prepare. All these exemptions taking off and revising it is not required. That is what is being told in this particular point. Did we understand this, people? So what is it again? Give to me in one line. What is this? Exemption. Should we have to let go of the exemptions and revise last year data for comparison purpose? Not required. But just give a disclosure saying the fact that you're moved up in life. From level 2, you become level 1. That disclosure, if you give, that is sufficient. Okay with this, sir? Can I go for next one, sir? So this is what, sir? This is a upgradation. Moving up in life. It could also be a moving down scenario. If it is moving down scenario, then what it is? So let's take another example. Maybe, okay. We are, let's say, in 1st April 2020. This year, next year is 1st April 2023 to 31st March 2024. Sir, upgradation only disclosure. Somebody is saying, write that, sir. Yes. If there is any upgradation, only disclosure. Yeah, that's good. That way you can remember. That's fine. Over, amma. One AC yakate. Over. All right. Now it's a downgradation scenario. Meaning, let's say, sir, I was a level 1 entity in the last year. I was a level. It could be anything from level 2 to level 3, level 3 to level 4, whatever upgradation. For simplicity, I'm taking level 1 to level 2 wala movement. Movement could be anything. So last year I was in level 1. So tell me, is there any exemption available for me or no AS exemptions? No AS exemptions. Current year, fortunately or unfortunately, I became level 2. For level 2 is AS exemptions available. Yeah. 3, 17, 21, 23. 26. So I have some AS exemptions. The question was, can I take that AS exemption in the current year? Last year I was a level 1. So I took no exemption. This year I become level 2. So can I take exemption? ICA has taken a little more stricter view. They said, this is a good scenario or this looks something problematic. Sir, you're going from level 1 to level 2. That means your turnover is increasing or reducing? Reducing. That means this is a happy scenario or a little careful scenario. Yeah. Hence they said, boss, this looks little fishy. Don't take exemptions now. Wait for next year also. 1st April 2024 to 31st March 2025. For next year also, if you are a level 2 entity, then take exemption. Meaning, for you to take the exemption, you should come into that category for 2 consecutive years. So if there is any downgradation, immediately exemption is not available for you. You have to wait for how many years? 2 years. 2 consecutive years. This is one year. Next year also you wait. Next year also, by chance, if you are still under level 2. First year you were in which one? Which level? Level 1. Second year you moved to which one? You downgraded and you came to level 2. Third year also, by chance, you are level 2 itself or level 3, whatever. If you're still downgrading, then you can take AS exemption. So basically, can you take exemptions here? No. You have to wait for how many years? 2 consecutive years. So this is your year 1. This is your year 2. So second year you can take AS exemption because of precautionary measure. That's all it is. Because you're downgrading means it's a little, probably something is wrong with the company. So they're saying wait for one more year and then take. This is your downgradation. That's what they've told here. Okay, leave. I'm not able to see that. Okay. Anyway, somewhere it is written all that. Whatever I'm saying. They've written in words. I've written it in example. Is this okay, people? Yes. So again, two scenarios. One is an upgradation. Other one is downgradation. If you're doing upgradation, then it is a sad news or happy news? Happy news. Okay. Then current year, anyway, no exemptions available for you. From level 2, if you go for level 1 in the current year, level 1 entities, do they get any exemptions? No. They have to compulsorily follow. But you don't prepare financial statements only for current year. You also give last year data for comparisons. But last year you took some exemption. Should you have to let go of it when we give a last year data? Is that required? Letting go required or not required? Not required. Just give a disclosure. That is good enough. However, if you are doing a downgradation, if it's a sad scenario, meaning you are not moving up in life, you are moving down in life. If you become a smaller company, you were a level 1 entity in the first year, second year you became a level 2 entities. For level 2 entities, is exemption applicable? Yes, but immediately can you take it? No. If there is a downgradation, you have to wait for 2 consecutive years and then take it. That's all. Okay, sir. Based on this, I think we have one question. First, maybe I'll discuss this, and one more point is there. I'll discuss and then we'll take up a question. Any doubts you have so far with for me, or goody? Nothing good about it, sir. Yes. These are all basically limits you'll have to remember. So that way this chapter is pretty nice because the chances of losing marks are less. If you know limits, full marks. Full limits, full marks. No limit, no marks. All or nothing wala scenario this is. So not much of a locha around here. Okay, sir. Sir, this is for what company? Non-corporate entities. Suppose you are a corporate entities. What to do, sir? Sir, you already learned, sir. If you are a company, no, our ICI messed up. They gave level 1, level 2, level 3 and level 4. MCA is saying, I want only 2. Only 2 categories. Whether you are an SMC or non-SMC. That's all. No 4 categories. SMC or non-SMC. SMC means small and medium size company. If you are an SMC, you get exemptions. From what? AS. If you are not an SMC, you will get no AS exemptions, meaning you have to follow all the accounting standards. That's what Ministry of Corporate Affairs, MCA ka guidelines. Easy, not more easy. No 4 limits, only 2 limits. That to this limit you already know, sir. This limit you already know. Level 1 ka limits, can somebody tell me? From the beginning. First one. Perfect. All listed companies comes under, listed entities comes under level 1. Already listed or yet to be listed? Yet to be listed also comes. India or abroad. Equity or debt. So if you are a listed company, automatically you are a non-SMC. Because for you to, maybe we'll write a criteria for SMC. If you want to call yourself as SMC, means you should not be not listed in India or abroad, equity, debt and all that criteria. Okay, this is the first criteria for you to be an SMC. You should not be listed. 2, you should not be a bank, a finance company or an insurance company. You should not be a bank, insurance company or a finance company. Now your turnover and borrowing limit. What is the turnover limit of level 1? SMC is that company whose turnover does not exceed 250 crore. If your turnover exceeds 250 crore, you are not a small company, you are a big company. Only if your turnover does not exceed 250 crore, you are an SMC or SMC rather. If your borrowing does not exceed 50 crore, you come under SMC. For these companies, you can take exemptions. If your limits are not satisfied, means automatically you are a big company, meaning you are a non-SMC and no exemptions are available. That's what is written over here. Drama. You're looking at me, I'm looking at you. What next? I'm just waiting so that if anybody wants to update, they can update. You are looking for that magical words from my mouth, class over. Trust me, even I'm also waiting. I'm also a little tired. My Sunday also a little gone. No. But anyways. So sad. No? Correct? SMC is small and medium sized company. Sir, what are the exemptions available here, sir? Cut off this, people. Take it as AS17. The partial exemptions are available. Leave the partial exemptions. This AS15, AS19 and all, you have partial exemptions. Maybe a little difficult to remember. For SMC, you get one exemptions, which is what? AS17. Segment reporting. From that, you can take full exemptions. Some disclosure exemptions and all are there. Leave that out because each one has a different limit. Maybe a little difficult to remember. That's good enough. Can you remember this much? If you are an SMC, you get exempted from AS17. There for level 2, 3, 4, it was AS3, 17, 21, 23, 27. Here it is, the one common one, which is 17. For non-SMC, you have to follow everything. No exemptions. Okay. Next question is yours. Next 2 questions. It's just based on the couple of concepts we have already learned. You need time or can we apply it in the next question? Can we go for the next question? Go for the next, everybody. Okay, check the screen and tell me the answer. Let's see. X, Y, Z. Wait, Lazy people, I tell you. Okay. Somebody saying I want break. I'll give you permanent break. Wait for 10 minutes. Full 3 days break I'll give you. You want 15 minutes break? I'll give you 3 days break. 2.5. Today we have still half a day only, no? So it's okay. Day is still counted. Yes, people. Next class will be on Wednesday. Same time. Regular time. 4:15 to conduct class in night also. But now only these people are, will take off. You only keep talking, we will not come. Okay. Online people, no chill. They'll anyway play the video and go. You keep talking, I'll come. Papa, you bichara have to listen, no. Tomorrow, group 2 class is there from Chennai. Chennai, I don't know. Could be. I don't know. I'm not taking in Chennai, so I have not much idea about it. But yeah, accounts class is not there. That much I can confirm. That too in Bangalore, that is specifically my class. Somebody else's class, you confirm. Okay, awesome. Coming back to this question now. X, Y, Z limited. So which non-corporate entities or corporate entities? So we are talking about corporate entities ka limits. They have a turnover of 50 crores in the previous year and they have a borrowing of 1 crore. Okay, in the previous year, and they want to avail exemptions in adopting accounting standards applicable for current year. Advise the management whether accounting standard exemptions are available or not available. Check and tell me, sir. Sir, whether this company is an SMC or not an SMC. SMC. What is the limit? 1, it should not be listed. Have they told anything about listing? Leave that. Okay. Have they told it is a bank, insurance company, finance company? No. Turnover. For you to be non-SMC. Non-SMC means big company. For you to be called as a big company, your turnover should exceed 250 crore. Here turnover is only 50 crore. And borrowing should exceed 50 crore. But here borrowing is only 1 crore. So that means this XYZ is what company? This XYZ Limited is it's an SMC company. So that means is AS exemption available? AS exemptions are available. If you want one pointer, you can write down there. AS17 is fully exempt. Like that, you can write. You can call out the condition of SMC also. Same thing we have written here. For you to be called as SMC, these conditions should be satisfied. Check the marks and call it. If they ask for MCQ question, 2 marks and all, don't waste your time writing the limits. Just one line solution conclusion you write. I mean, 1 point you write and conclude and leave it off. If suppose the same question comes for 4 marks, doubtful, but if at all it is, then first you'll write the condition. For you to come under SMC category, it should not be listed, it should not be bank, turnover should not exceed 250 crore, borrowing should not exceed 50 crore. First you'll write the condition And then you will say in the present case. Want me to give that answer or can you manage? Give right. Conditions also you want me to give? Yeah, give no. What is half hazard? They're telling. That too, they're directly telling with their eyes. ArP people, I tell you. Okay. All right. An SMC company. An SMC company is that company. An SMC company is that company which A is not listed slash in the process of listing in India or listing, or you can write listing equity or debt instruments in India or abroad. That's the first condition. Second one, which is not a bank, finance company slash insurance company. Finance company is an NBFC company. Whose the turnover, or you can strike off this word over here, which here gives you a little long meaning, is a company. Here only you can add of which is not a listed company, which is not a bank or finance or insurance company, whose turnover does not exceed 250 crores or borrowings. If you don't want to write, it's fine, people. It's there over here. Okay, it's not a mandatory. Borrowings does not exceed 50 crore. If you want, you can make that as a separate pointer altogether. Okay, this is the first point you'll write. Next point you'll write in the present case. X Limited or XYZ Limited. No? XYZ Limited has a turnover of how much is that? 50 crore and borrowings of 1 crore. And then you can write the final conclusion. Therefore, XYZ Limited is SMC and accounting standard exemptions are available. I am also done. Hang on. என்ன பண்றதுப்பா கல்யா finish copying over one more question, done not done only, then full jute. Anyone still updating? Or those of you who are done can probably go through question number 2, the very next question. Oh yeah, no. Cha. Such a nice excuse, man. Cha. A brilliant one indeed. Okay, next question. Question number 2. Okay, look at this. Finish now, everyone? Copy? Okay, answer this question, people. A company was classified as a non-SMC in 20X1, X2. It's a non-SMC. Non-SMC means small company or big company? Big company. In the next year, that is 20X2, X3. In X2, X3, it has been classified as a SMC. Upgradation or downgradation? It was a non-SMC, meaning it was a big company in the last year. Now, this year it has become a small company. Okay. The management desires to avail exemptions or relaxations for SMC for 20X2, X3. Anyway, SMCs have some AS exemption. So they have become SMC in this year. So they want to take AS exemptions. Now they are asking you, you need to advise whether, however, the accountant of the company does not agree with the same. Probably studied things properly. Okay. All right. So accountant is saying, no, you cannot take exemption. But management is saying, we can take it. Why can't? You need to guide, tell. Last year they were a big company. This year they become small. And this year they want to avail AS exemption. Immediately in the current year, is it available or what? If there is a downgradation, you need to wait for 2 consecutive years. So company should remain as SMC for 2 consecutive years. Therefore, in the current year, can they take exemption or wait for 1 more year? So therefore, management of the company cannot avail exemption for 20X3. If you want, you can write 1 more. Exemption is available in the next year, provided they still remain as SMC. Okay. Or one doubt is, sir, last year not an SMC, current year SMC. So next year X3, X4. If it is still SMC, can you take exemption? Yes. Suppose you became non-SMC means? Suppose you became non-SMC means, then no exemption. You have to wait for 2 consecutive years, and for 2 consecutive years you have to be a SMC only. If any of the condition changes, Goinda, exemption is not available to you. Like that. So there's not upgradation, this is downgradation. Someone is saying upgradation, maybe time for you to wind up the class. Non-SMC means not chota company. Non-SMC means big company. From big company, last year you were, I think you're getting the years wrong. This is last year. Previous year you were big company. Current year you have become small company. So now you tell upgradation or downgradation. It's a downgradation. For downgradation, immediately you can't take exemption. You have to wait for 2 consecutive years. Okay, that is this question. And I think, okay, no, can I move on to the next? No problem. So next question is advantages, disadvantages of accounting standards. I think that you are already comfortable with. Done already. Tell me what are those? Same thing. Very straightforward questions are pretty rare, people. It is there. I think it's there in one of the study material. I simply bought it. Okay, that is that question. What are the benefits of basically accounting standards? Standardization makes the financial statements more comparable. Additional standards accounting standards require some additional disclosures so that it will help the users to adopt or analyze financial statements better. Those are your topic, or maybe why to leave. Some MCQ question is there. Maybe I think it is homework. Can you take it as homework? Pretty straightforward, sir. Accounting or maybe 2 minutes. Non-corporate entities, who releases AS? MCA or ICI? We don't have to read other options at all. Okay. They have given MCQ, we'll make it as fill in the blanks. Okay. Accounting standards. Okay, this one. They harmonize accounting policies and eliminate non-comparability. One of the advantages of accounting standard is to make financial statements comparable and improve the reliability of financial statements. Obviously, accounting standards are rules. If everybody follows the rules, then obviously financial statements will become more relevant and reliable. They're asking which is true. Both what? A and B. That's the answer. It is essential to standardize accounting principle and policies to ensure transparency, consistency, comparability, all of them. Which committee is responsible for approving accounting standards applicable for companies? For companies, whose responsibility? Ministry of Corporate Affairs, MCA. Global standards facilitate. Global standard means IFRS or Ind AS. They facilitate cross-border flow of money, comparability of financial statements, uniformity, transparency, or all of them. Looks like all. Sir, these questions will come, sir. Sir, these questions are there in your study material. I doubt MCQ questions they're going to ask like that. According to me, most probably it's going to be a calculative based MCQ. Like we have done internal reconstruction. Provision for liability settled at 1 lakh. Reconstruction account will be debited by 1 lakh, 2 lakh, 3 lakh, 4 lakh. Which one? We have passed journal entry. Like that, you will have to visualize and select the right option. I feel most probably you're going to get those sort of MCQs. But unfortunately, those sort of MCQs are not available in our study material currently. They have these sort of things. Hence, I brought in this one. Okay, let's see. Let's wait for an attempt or two because they have not clarified. From what I hear, it's going to be a case-based MCQ. They're going to give you a case where you need to calculate something and do it. Let's see. For now, there is still a little more clarity required on that. Check this. Non-corporate entities which are not level 1 whose turnover exceeds dash but does not exceed 250 crore. Sir, if you are not a level 1, automatically you are in level 2. What is level 2 ka limit, sir? 50 crore. Yes, turnover should be 50 crores or more, but exceeds 50 crore but does not exceed 250 crore. So that's what the limit they're asking. Turnover limit ka is what? 50 crore. That is the answer. Following standard is not applicable for non-corporate entities falling under level 2, which is what? AS 17. That's what we wrote common there. I think, yeah, that's all. 1 second. Oh, in fact, a couple of them are also there. All non-corporate entities engaged in commercial, industrial and business activities whose turnover exceeds 250 crore. Stop there only. If your turnover exceeds 250 crore, automatically you are there in which category? Level 1. Awesome. All non-corporate entities engaged in commercial activities having a borrowing in excess of 2 crore but does not exceed 10 crore. Borrowing is 2 crores, it's exceeding 2 crore but not exceeding 10 crore. Which one? Level 1, level 2, level 3. Level 3 entity. Perfect. Small medium sized company means a company which may be bank. Can a bank be SMC? No. A turnover, can SMC ka turnover exceed 50 crore? No. Can turnover exceeds 500 crore? No. For turnover should not exceed how much? What is the limit? Turnover should not exceed 250 crore. Hence option B is the answer. Bangalore. That's all. Okay. That's all. So there's nothing much to revise, sir. That's all is a revision. No? Somebody saying revision, you want revision? No problem. 2 minutes. We'll revise like this only. Accounting standards are written policy documents issued by the government. It's a notified document. So it is issued by ICI. Now I became. So it's issued by the government. AS covers only 4 areas. RMPD. Recognition, measurement, presentation, disclosure. Whether to recognize something or not. If at all you say recognize, the next question is how much. That's the measurement. Presentation, disclose where to show it. In P&L, in cash flow statement, in balance sheet. In balance sheet means which component of balance sheet, etc. comes under measurement. Last is your presentation. Last is your disclosure. Disclosure is basically giving you some extra information so that users can understand financial statements better. So the advantages of accounting standards could be, one, it standardizes, meaning some confusion in accounting is done away, and then it makes financial statements more comparable. And the other one is, since additional disclosures are required, users can analyze financial statements better. That is one. And then I told you standard setting process. Who's in charge? Who takes the lead here? ICI. And which specific body in ICI? Accounting standard board takes the lead. Okay. First, they will identify for which area AS needs to be formed. Then they'll form study group, which will consist of experts. That study group will form the draft standards. That draft standard will be given to the respective people for comments. If any comments is received, accordingly, they might revise the draft one, or the draft will be accepted by Central Council members. Once it is accepted, it will be given to MCA, and MCA will release it for companies, and ICI will release it for non-corporate entities. That's your process for this. Release. Then we saw Ind AS. Ind AS is applicable from 1st April. It's applicable in phases. First for normal companies. For companies which are not banks, which are not insurance companies, which are not NBFCs, Ind AS is applicable from 1st April 2016. That is under phase 1. Phase 1, which companies fall under? If you are a listed company and if your net worth is 500 crores or more, it comes under phase 1. You are an unlisted company, your net worth is 500 crores or more. Again, you come under phase 1. If you are applicable to Ind AS, your parent or your subsidiary company also has to follow Ind AS. That's phase 1. Phase 2 is all listed companies, irrespective of their turnover, comes under phase 2. Then unlisted company whose net worth is half, that is 250 crores or more, will come under phase 2. Then NBFC. NBFC ka first applicability is from 1st April 2018. So same limits if you are a listed NBFC or unlisted NBFC, but if your net worth is 500 crores or more, 1st April 2018. From 1st April 2019, it will be applicable for which? For all listed NBFCs and for all unlisted NBFCs whose net worth is 250 crores or more. Okay, for insurance company and banking company, still Ind AS is not yet applicable. The difference between IFRS and Ind AS only, we call it as carve out. Okay, then we went to accounting standards. For which entities AS is applicable? Both for corporate as well as non-corporate. But provided you should be engaged in commercial activities. If you are in commercial activities, AS will be applicable to you. So for non-corporate entities, we have 4 categories: level 1, level 2, level 3 and level 4. If you want to come under level 1, all listed companies or in the process of listing will come under level 1. Banks, insurance company, finance company will come under level 1. Or the other one is turnover. Turnover should exceed 250 crore. Borrowing should exceed 50 crore. That's level 1. Level 2 ka turnover exceeds 50 crore but does not exceed 250 crore. Borrowing exceeds 10 crore but does not exceed 50 crore. Level 3 ka turnover exceeds 10 crore but does not exceed 50 crore. Borrowing exceeds 2 crore but does not exceed 10 crore. If you are not level 1, level 2, level 3, automatically you come under level 4. So exemptions available are AS 3, 17, 21, 23, 27 for non-corporate entities. If you are a corporate entities, in fact, if there is any downgradation, if there is a downgradation from big company, if you are becoming a small company, can you immediately take exemption or wait? Wait for 2 consecutive years and then take. If there is an upgradation, then you lose the exemption definitely. But previous year ka data should you have to revise? No, previous year, whatever exemption you have taken, you can let it be as it is. You need not have to revise it even for comparison purpose. That is one. Then if you are a corporate entities, there is only 2 sector, which is SMC and not an SMC. So here, I think the limit is same as level 1. If you want to call yourself as an SMC 1, you should not be listed, nor in the process of listing. You should not be a bank or a financial institutions or insurance company. Your turnover should not exceed 250 crore. Your borrowing should not exceed 50 crore. For SMC company, accounting standard 17 is fully exempt. Okay, I think that's all we studied. That is your revision. Have a good day. See you. Bye-bye.